I'm not going to speak a whole lot today. Andy Paden is going to be the person who speaks, and he does a great presentation. So, but I am going to give you a quick little intro on the Oklahoma SBDC. So my date's off on that. My name's once again Ben Evans, business advisor with the Oklahoma SBDC. I'm located at Pioneer Technology Center in Ponca City. Andy Paden, who will be your presenter, is the certified insurance counselor at INSURICA in Oklahoma City. And Cindy Rumenier is our training coordinator with the Oklahoma SBDC down in Durant. So what we do, the SBDC provides confidential, high-quality, no-cost entrepreneurial and small business management advising in order to help Oklahomans start and grow businesses. We're committed to helping grow Oklahoma's economy one small business at a time. We are funded by the U.S. Small Business Administration. They provide a federal funding which requires a dollar-for-dollar match. State funding and host partnerships provide that required match. You can see some of our expertise. All of our advisors are business generalists. My history is banking, so I'm pretty familiar with the financial aspect of your business, but all of our advisors can help you in any aspect of your business. So at the end, we'll bring this slide back up so you can get all of our contact information again.
Recording in progress.
But give you a little bit of information about Andy. He's a certified insurance counselor and the vice president of marketing. He joined INSURICA 15 years ago as commercial insurance. He has 15 years of client leadership with large corporate customers, designing custom solutions to complete risk management and insurance challenges. In 2014, Andy earned the certified insurance counselor designation from the National Alliance for Insurance Education and Research. He specializes in large commercial property risks and executive liability. So I'm going to stop sharing that, and then I'm going to share this screen. One thing that I will say, if your name is on here different than what you registered as, please put it in there because I'm going to send you this information after the presentation. And if your name is John on here, just send me a message that says, hey, this is John Smith. I'm here. So, Andy, go ahead, please.
Yeah, great. Can everybody hear me? I've lit up on my box, so it looks like I'm broadcasting okay. Yeah, it's great to be with everyone. Enjoy doing these sessions. We do them on a quarterly basis, going over the basics of commercial insurance. And I guess maybe not quite 2 years, but well over 1 year now that we've been doing this, maybe a year and a half, maybe this is our 6th or 7th opportunity. I say that just because it's great to be with you all. First of all, having the opportunity to speak with emerging entrepreneurs is inspirational to a degree for me. It's just always great to be among people that have that entrepreneurial spirit, great ideas, great creativity. And you're in the process, I suppose, of turning those great ideas and those great products into businesses. And not to get too philosophical, but I personally believe that small business is the backbone of the American economy. And without small businesses, we would not be the great country that we are. But I want to just give you just a little bit more background. I guess maybe I'll officially update my bio tomorrow. July 1 is my 16th anniversary here at INSURICA. And full disclosure, this is the only place I've ever worked in insurance. I had a different career prior to that. I was in fundraising and nonprofit management. I say that I spent about 9 years as the director of the United Way of Norman, Oklahoma. And I mention that because occasionally we would have board meetings every month, but occasionally the topic of discussion at those board meetings, it came around to insurance, usually around the time of year that we would renew it. And I knew just enough about insurance to sort of have it relate to the United Way or my organization at the time. But really, I just kind of sat back and let the bankers and the accountants and the lawyers kind of talk it out, and as long as it was okay with them, I knew that we were in good. Point is, I didn't know anything about insurance, and it's complicated. It really is something that we don't deal with a lot. Most of us have insurance if we have a home or an auto, And I mean, speaking for me, I had a really good State Farm agent here in Norman, and I was just kind of like, Cindy, you just tell me what I need, you just figure it out, and I'm just going to trust that you know what I need, and I'll just pay the bill when it comes, and I'll just kind of sleep well at night knowing I'm covered. And it's great. You do want to have a good relationship with, an insurance agent. I'm kind of preferential to independent insurance agents that specialize in business insurance in your towns. They're all over the state. I would encourage you to reach out, if you haven't already, to find somebody that that has some background in this, and somebody you can continue this conversation with. But every business is different. Every business is unique. Every business has their own needs. And so really, every insurance policy that would be applicable to your business will be different. But there are a lot of commonalities in these insurance policies, and that's what we're going to focus on today. Ben already kind of put out there, please feel free to interrupt at any time, ask a question. Hopefully it's pertinent for everybody. I hope to communicate pretty well. But if I don't, please ask that question, and we'll go from there. This is a one-page presentation. We won't have to advance slides or anything. I'll occasionally ask Ben to scroll down a little bit. But before we actually start talking about insurance, and insurance, by the way, is a contract that you buy from an insurance company, and the contract provides coverage. We'll talk about it in a minute. But I think maybe it's more beneficial to begin with just the concept of risk, because that really is what insurance is for. You're putting the responsibility of that risk on an insurance company through the transfer of that risk to, via this contract we're going to talk about. But really, you should understand that you don't have to buy insurance for everything. It's not a requirement. There are some laws that prescribe that, but let's understand risk first. Risk is anything that could be a threat to your business, the safety and health of your business, the financial health and safety of your business. So let's talk about this. There are a few things that you can do with risk, including transfer it by contract. That's the last thing we're going to talk about. But the very first thing we want to talk about is one thing you can do with risk is eliminate it. I use this story. I don't know if anybody, maybe show of hands, anybody on this call today, on this presentation today, have you been a participant in this in one of the previous quarters, or is everybody brand new? I'm going to trust that everybody's brand new. Yeah, okay, good. Yeah, I see a lot of new answer there. Good. So hopefully this story won't be too repetitive. A long time ago, it was probably in the late 70s, early 80s, there was an event, a news event, that is credited with the very beginning of the 24-hour news cycle. The cable news generation was ushered in when, I wonder if anybody remembers this, baby Jessica fell down a well, and CNN covered that story 24 hours. And of course, the good news is baby Jessica was rescued. Everybody in the world's eyes were on that event happening in the United States. Baby Jessica is a 40-year-old mother of however many now. But it was really tragic. Baby Jessica was a little, toddler, maybe about 2 years old. And in her own backyard, oh my gosh, this is so frightening to even think about. That baby fell down a well that had an opening there in her backyard, and she got wedged many feet down under the earth, and they had to drill a companion well or a hole, and they kind of cut that piece of the well pipe out and brought her out to safety. But when that story ended in a happy way, with a happy ending, baby Jessica was saved. Her parents didn't say, well, we hope this never happens again, but just in case, we're going to go buy some insurance in case. No, of course not. What they did was they welded a 12-inch cap on the top of that well opening so that baby Jessica would never fall, or anybody would never fall down that hole again. So they eliminated the risk by erasing the risk from the possibility of it happening. So take that story to a lot of other kinds of risk. You can eliminate risk. Once you recognize it, if you can do away with it so that there's no chance that it's going to happen, then you've accomplished your goal. Now, the next couple of things I think are more understandable. First of all, what happens like when there's ice and snow? It happens a lot in Oklahoma. And then we have to get out to get milk or groceries or whatever. We're going to the local grocery store. We park our car. Usually things have happened. First of all, if they had an opportunity, there's usually like bulldozers or other kind of snow plows that come out to the parking lot, and they push the snow up against the edges of the parking lot so cars can park there. And then as customers start their walk from their car into the building on the sidewalks and stuff, it's not unusual at all to see some ice melt that has been sprinkled about. We go into the grocery store. They have those big welcome mats out where your feet can kind of dry off a little bit before you get onto the tile floor. And then they have those little yellow warning signs, slippery when wet, or those are all things that business owners do to reduce the risk, to make sure that they're doing everything that they can do to prevent a customer slipping and falling on their floor and hurting themselves. That's a great example of reducing a risk. The next thing that you can do to risk is retain it. And the example that I give here has to do with flood insurance. Flood insurance is a product that you buy directly from the government, actually, even though there are some insurance companies that will sell the government insurance directly to their customers. But anyway, we're all maybe aware that, the Corps of Engineers or somebody looks at the different streams and lakes and bodies of water that we live around, and they establish sort of like floodplain boundaries. And I've heard things like, 20-year floodplain, 100-year floodplain, 500-year floodplain. And what they're saying is probably once in every 20 years, this area will flood, or once in every 100 years, or once in every 500 years. My wife and I, we have a house in central Norman, and it's on an actual creek, Merkle Creek. It's on Merkle Creek. And boy, when it rains, that creek runs pretty high. And some people in my neighborhood, especially in the last 5 years, have experienced flooding in their homes. But not everybody in my neighborhood. Point is, there's a decision that we need to make. We can decide to buy flood insurance to protect us in case we feel like we live a little bit too close to the creek. And there's some neighbors in our neighborhood that are just on the edge of like a 500-year floodplain. And, flood insurance is like $650 a year for us. And it's a little bit of a decision, do I buy the insurance and take, and have it in place if for some crazy reason our house actually flooded? Or I calculate the odds. I'm on the edge of the 500-year place. It's never flooded before. There's nobody around that ever has recognized that this particular house is flooded. You know what? I'm okay with this risk. I'm just going to retain it myself. I'm going to self-insure this. So I'm aware of the risk. I know that I could do something about it, like transfer it to an insurance company. But I'm pretty comfortable with the idea that the odds of my house flooding is so remote that it really doesn't warrant $650 a year for me to buy insurance against it. That's an example of retaining it. It's also called self-insuring. It's like, I'm just going to insure this risk myself. But when the things that I've talked about so far, the number one most important commonality between those things is that you understand and recognize the risk. You know about it. The problem for businesses is that there's a risk out there that you don't even know anything about until it happens. And then you wonder, Do I have insurance to protect me against this thing that just happened, or what? So really, my first sort of like request of you all as entrepreneurs is to really spend some thoughtful time understanding the unique characteristics about your business and what kind of different threats could be out there that would damage your business, financial health, or the physical health of your customers or your property or whatever, and really take inventory of that risk. It's only then that you can decide what you might want to do with it. And I think that's why this, the small business development center that you're part of, a local expert, these are really good resources for you to reach out and really try to understand to the degree possible what are the different threats that could be present as you operate your business. Lastly, transfer it is a way that you can do that. One way that transfer the risk is buying these insurance contracts that I talked about, but it's also very common. And I think you all will run into this as you start engaging with customers and the prospects that are future customers of yours. Some businesses engage via a contract, or you answer, an RFP or something to try to provide services or a product to a business. And when you start reading the engagement contracts, there's always an insurance clause in those contracts, and your customer is going to try to push as much of their risk off on you by contract as possible. It's not uncommon, but there's very specific instructions to you as a service or a product provider in the insurance clause part of the contract that says, if you're going to do business with us, this is the kind of insurance you're going to have. Full disclosure, we sell a lot of insurance because there are contracts out there that require insurance, and business owners like you guys, you make the decision, do I want to do business with these people? If I do, then I've got to have the insurance in place that they require. And if I don't want to have that business, if I don't want to have that customer's business, then we'll just agree to disagree and go on down the road. Here's a question. What did it say? Is there insurance for like pop-up events? Short answer is yes. You can almost insure anything and everything. What you might find is that if you're going to participate in a pop-up business type event that's being sponsored by, I don't know, local chamber of commerce or local technical training center or whatever, they're probably going to require you to show proof of insurance in order for you to participate in those kinds of events. But yeah, there are insurance. So are there any questions before I go into the different kind of contracts? We're going to spend a lot of time talking about one particular type of a contract that's applicable to most small businesses in America out there.
Nothing else in the chat, Andy.
Okay, great. So we already established that, once you decide you're going to buy insurance, you're actually buying a contract, and the contract says the insurer is the issuer of the contract. That's that's the entity that you're transferring your risk to. You're the insured, you're the customer, you're the insured by the contract, and the insurer is the big company like Hartford, Travelers, CNA, Zurich, AIG. Those are all insurers, and they're the ones that are selling you the insurance. But it's all contract, and the contract is going to say what these things cover and what they don't cover. So, being able to have a relationship with somebody, an attorney or your insurance professional or whatever, that understand and read contracts for a living, that would be a really good person for you to have as a partner, as a friend of your business, so that you can make sure that the contract is covering what you really need to be covered. But in general, insurance covers property and it covers liability, and you can buy little contracts and group them all together into one big program, or you can buy a policy that combines something. Is it better to try to use the same insurance company? What was the rest of that, Ben?
Is it better to try to use the same insurance company if you're a business that you use for your personal car, homeowners, etc., because you have an established relationship?
Yeah, maybe that's the answer to every question. Maybe it depends. But if you're doing business with a State Farm agent, let's say, these are all great reputable companies. They all are outstanding. Whether it's Farmers, um, you know, uh, uh, Liberty Mutual, State Farm, they're all reputable. And some, yeah, State Farm, they do cover some small businesses. Okay, they do, but it's also entirely possible that if your business is unique in any way, you're offering a particular service or a product that they may not, they may or may not write it, but it's not a bad idea to approach your State Farm agent or your local agent that has your home and your auto, and at least have a conversation with them about it. But I think I'll have the ability to shine a little more light on that question as we go on.
Well, I'll
Um,
say, Andy, what I always recommend is talk to your current agent first, and then go get a quote from an independent.
sure.
That's a very reasonable thing to do. Is get two quotes for everything.
Yeah. Well, you want to be an educated buyer for sure, and that also includes making sure you have the best value. But prices could be wildly different, but it's probably because the contracts cover things in very different ways. So this is part of why we're doing this today, is to help you guys be informed buyers in the insurance marketplace. But understanding what you need is kind of the first step. Here's just kind of an interesting thing. The State Farms, Farmers, Liberty Mutuals of the world, all states, they're all great companies, but they're also they use the captive agent model. And what that means is that the State Farm agent, for example, sells State Farm insurance that is offered by State Farm, the insurance company, the insurer. An independent agent has the ability. It's the independent model. It's the non-captive agent model, and we INSURICA is an independent insurance agency, and we represent. I'm trying not to exaggerate, but literally thousands of insurance companies out in the world. Some of the ones are big, and you've heard of them: Hartford, Travelers, CNA, as I said earlier. But we have the ability to go shop in the independent market space on behalf of our customers, and find sort of the best program that's out there. I suppose the downside, if there is one, about using a captive agent is that when their company increases rates or changes the terms and conditions of their contract, the agent has just to say, "I'm sorry, you may ought to go see Allstate or Liberty Mutual or somebody else that hasn't had a price increase." So anyway, let's focus a little bit on the most common contract type for small business owners and small business. We call it a BOP. You can see there under that little box, the business owner's policy. And what it really does, and this is why I put a box around these two things, it really is one contract that combines coverage for property exposures and general liability exposures. And so we all hear the commercials that talk about the bundle this and bundle that, bundle your home and bundle your auto. There's similar logic here. Bundling your property and your general liability is good because, one, you save money, and two, these BOP type policies, even though they're a little bit generic, they have a bunch of different and extra coverages that are baked into it that are beneficial to your business. That if you had to go buy these things bit by bit and parcel by parcel and pull it all together, it would be a whole lot more expensive to you as a business owner than if you bought a BOP package. So really, one of my first bits of advice is go out there and try to see if there's a BOP policy product out there for your small business. All the companies offer them. Even the State Farms and the Allstates and the Farmers of the world, they have their version of a BOP policy too. They may call it something different. They may have a special, like a marketing name for it, like, Small Business Select, or, the Business Bundle or something like that. But really what they're all talking about is a business owner's policy, or a BOP. A BOP is sort of the generic term for this package of a policy for a small business owner. So scroll back up a little bit, Ben. Let's talk about property and general liability specifically. First of all, property is going to insure your buildings and your stuff, the property side of the policy. So your buildings, and you may or may not own your building, but check your lease agreement. If you're leasing a building, it may be like a triple net lease where you're responsible for insuring the building, even though you're not the owner of the building. And your stuff, of course, is all the contents that go inside your space. One of the mental pictures that I like to draw for people, and because we all have homes, it's easier to understand that. But let's pretend I could hold my house in the palm of my hand, and the roof was not a roof, it was a lid, and I kind of unscrewed the lid. If you can turn your house over and shake, all the things that fall out onto the ground is the contents, okay? And so, is the toilet a content? Well, it's kind of screwed onto my house and it's not going to fall out. So it probably should be insured as part of the building. But my couch and my table and my television and stuff, that's all going to fall out onto the ground. That would be contents. It's pretty easy to understand, actually. The building's the building, the roof and the bricks and the walls and the floor and everything, and then the stuff that falls out. By the way, an insurance value, so what you want to insure your building for and the contents for, it's really different than the real estate value. So, if you have a $200,000 home or a $150,000 home, that's what you bought it for. But especially given today's sort of economic conditions, the builder might have to come to you and say, you know what, it's going to cost $200,000 to rebuild this house. Complete loss. I only paid $150 for it. I know, but it's going to cost $200 to build it back. So when you set the value of the insurance that you're buying, you want to think about, this is what it's going to cost to replace this building if something happens to it. It's not what you could sell it for. The land still has value underneath it, but what it would cost per square foot to build that building back, or what it would cost to replace that television or whatever. Well, the TV's 5 years old. I know, but you're going to want a new one. So what would it cost to replace that? One final thing I think is important that is found in the property policy. I haven't put it on here, but there is a function of your property policy that's called business interruption. Okay, so think about it. If you're a business owner and you have a fire and you're forced to close your business for a period of time, weeks or months, you're not going to be earning your income during that time that it's being repaired or replaced or whatever. So in your property policy, the policy is actually going to pay you your lost income that you would have made during that time. You know what? The electric bill may stop if your building burns down, but the loan on that building is not going to stop. So you really need this income replacement to keep paying your bills while you're waiting for your operations to return to normal. Any questions on the property side? Easiest to understand of all insurance policies, but still pretty complex if you think about it. Okay. Let's talk about general liability. General liability kind of means like not specific liability, and we're going to talk about some of those. Business disruption, absolutely. That's what property insurance is for. And sometimes it's optional, so you want to be sure and make sure that's included, because it'd be great to have your building replaced, of course, but what if you go bankrupt while you're waiting for it to be built? That's what business disruption, business interruption, business income coverage is for. General liability is broken into a couple of different parts, and I'll hit on a couple of them. First of all, I call it premises liability. It's the slip and fall stuff. It kind of goes back to that example of, when it's icy and snowy outside and somebody comes in and slips and falls and hurts their neck or their back or their head or whatever, you might get sued. And that's another important part about liability insurance. It's going to respond whether it's your actual fault or not. If you get sued for, bodily injury or property damage, that's what general liability responds to. And so whether it's actually your fault, like a court says, yeah, it's your fault, or you just need an attorney in place to get you free from this frivolous lawsuit, that's what general liability insurance is going to help you respond to. The other thing of, I think, particular interest to a small business owner is there's a piece of the general liability policy called products and completed operations liability. So if for some reason the product that you sell somebody goes off and hurts somebody and they come back and sue you, your general liability is going to respond there. Or a completed operation would be like your tire store when I was in high school and college. And my boss always wanted me to be sure that when I did an oil change, I got that drain plug put back in place without cross-threading it. It has to be on completely perfectly, because guess what happens? If I mess that piece of it up and oil starts draining out of that oil pan, a couple miles down the road, the customer that we just changed their oil, their engine's going to seize up, and it's going to cost them what? $3,000-$5,000 to replace, and it was my fault as the employee of Goodyear Tire Service Center. So general liability will insure my completed operations because I made a mistake whenever I did that. Think about plumbers. You know, they don't get the faucet on exactly right, and you wake up in the morning and your whole kitchen's flooded out, and now you have to replace the floor and everything. That's the kind of insurance this general liability insurance would respond in that regard. Those are the two biggest pieces of the general liability. But it responds when there's been like actual or alleged property damage or bodily injury. Somebody's body has been hurt. Any questions there on the BOP policies, the property, the general liability?
Good so far, Andy.
Good so far. Okay. So it's 11:30, and I just will sort of quickly go through the remainder of these. Some of these are especially important. Okay, I see Christina to everybody. Yes, professional liability is specifically for consulting and stuff. I'll talk on that in just a minute, but that's a great question. Let's go down to executive liability real fast. Let's look at that section, Ben. Okay. Executive liability has a lot of different names, and there's not a test on this, so don't worry about memorizing this, but just know that executive liability, also called directors and officers liability, you'll hear it referred to as D&O, directors and officers liability. Think about yourself as a director and an officer of your company. You're the owner of the company. And your business is out there doing things, you know, providing services, providing products, entering into contracts with other people, just things that businesses do. And directors and officers of businesses, the owners of the businesses, sort of like wake up one day and go, wow, I hope my business doesn't screw up to the point where I get sued, and now they come after my home and my retirement and my income and my college savings fund and all the things that I've got going personally. A D&O insurance policy is that insurance policy that sort of sets up a wall between the operations of your business and your personal stuff. And can you see how that's kind of important as a business owner? I think there's a lot of small businesses out there that don't have a D&O type policy in place. And therefore, it's possible that your personal assets are in jeopardy. Now, with that said, and here's a common question, an attorney will help you set up your business in such a way that the legal structure, the legal entity of your business is other ways to help protect your own personal assets. I would definitely rely on the counseling of your attorney to talk to you about the benefits and the costs associated with it, with having an executive liability or a D&O policy in place. We can sell it to you, but it's important to involve as many people as possible that you trust in that decision. But a D&O policy actually has other parts to it, like we talked about in that property and the general liability. And the parts of the D&O policy is the actual directors and officers liability part. There's also an employment practices liability part. So if you're hiring people, things like discrimination, sexual harassment, hostile work environment, those are the kinds of things, your employees can kind of sue the employer for certain things. And this is the section that would respond to that. Fiduciary liability applies when a business has like a retirement fund, or there's even some fiduciary liability policies that speak into risks associated with benefits plans like health insurance and dental insurance and vision insurance and things. So fiduciary liability would respond if your employees, every time there's a crash in the stock market, if you don't do it correctly, employees would be like, hey, who invested our retirement funds? That's crazy. My retirement was worth $1 million and now it's worth $600,000. Somebody owes me $400,000 because you made a stupid investment or whatever. So it's kind of lawsuits that come out of a fiduciary liability. Lastly, crime, which is, when your employees steal from you. That's what crime is. Theft is when like somebody from the outside comes in and steals your stuff, and that's covered under the property policy. But when your employees steal from you, crime will respond to that. Sometimes similar policies are called employee dishonesty. And then this is kind of the Mission Impossible piece of it, kidnap and ransom. There are businesses, some of our customers do business internationally. It's not unusual for them to travel to other places, other continents to do business. And it's kind of sad to say, but outside of the United States, one of the most popular things to do among criminals is to kidnap an American and hold them for ransom. The good news is most of them don't plan to hurt you, but an American's worth about $250,000 on the open market. And so if they can hold you hostage and get $250,000 in exchange for you, then they're going to do it. Believe it or not, there's K&R, kidnap and ransom insurance that business owners can buy. And it's just crazy stories about how if an actual business owner is actually kidnapped and a ransom is actually demanded, insurance companies have networks across the globe that have $250,000 cash ready to deliver, for example, to get you back safely. And you can buy insurance for that. Isn't that crazy? But that is true. One last thing about D&O. I like to tell this story a little bit because I was born and raised in Oklahoma. And those of you who are born and raised in Oklahoma may get a giggle out of this. But when I was a teenager and old enough to drive, if I had a good friend or a girl I was interested in, I'd say, hey, you want to go get a Coke? And like a Coke day, you go get a Coke. And they're like, sure, let's go get a Coke. And so we'd drive to Sonic or a local drive-in or something. And then I'd be like, hey, what kind of Coke do you want? I was like, I'll have a Mountain Dew. It's like, okay, I'll go get you a Mountain Dew Coke. So D&O is sometimes a little bit like Coke. It's like we use it sort of like to describe a lot of things. But so if you want to go on a Coke date, you can actually get a Coke or you can get a Dr. Pepper. But it's still called a Coke date. So anyway, sometimes people say D&O, and they really mean this entire suite of coverages that are optional. You can kind of check which ones you want. You can get just directors and officers liability, Coke, or you can get employment practices liability, Dr. Pepper. You can get fiduciary liability, Sprite. You can get crime, Mountain Dew, or you can get kidnap and ransom, I don't know, orange, some kind of different flavors of Coke, but it's all kind of considered soft drinks. So anyway, that's a way that it helps me remember. We call it D&O, but it's actually several different kinds of soft drinks that are underneath that banner. Okay, so far so good. Let's answer that other lady's question about professional liability. Okay, it's a little bit like the completed products and completed operations over on the general liability we talked about, but you generally are going to get sued if you as a professional make a mistake. Very easy to use doctors, physicians, as an example, because we go into doctors' offices, they look at our bodies, they tell us, Andy, it looks like you got a little cancer on your nose. I had that a couple of months ago, and so you go in with surgery and they work on you. What if a doctor, what if I have to have my gallbladder out or something, and something goes terribly wrong? A doctor makes a horrible mistake. A doctor could get sued if something kind of goes wrong. And then a professional liability policy in the doctor world, it's called physician's liability or medical malpractice. That's an example of a kind of a professional liability policy. But hey, lawyers have similar, maybe they give some bad advice, maybe they don't file a particular document that they meant to file, and that costs their customer money and opportunity. They're going to get sued. Architects, engineers, counselors, consultants. There's miscellaneous professional liability that's kind of a catch-all. Some of these different policies speak into specifically the kind of work they're doing. I saw a question here. These are also called E&O policies, which stands for errors and omissions. Errors, I've made a mistake. I did something that I wasn't supposed to do. And then an omission is like, I forgot to do something that I was supposed to do, and that has caused my customer injury. When doctors make mistakes, our bodies get hurt, right? So we need to not confuse bodily injury with general liability and the kind of bodily injury that happens when a doctor makes a mistake. So there's a little bit of a nuance there. But, if you're a small business that's offering advice, or you're drawing, maybe you're a budding architect, going to do bookkeeping for somebody. And obviously, the idea is that, there's a lot of like tax preparers out there. Nobody likes to do taxes. And so it's a budding industry. If you're getting ready to be a tax preparer and you're going to do somebody else's taxes and help them file those, yeah, you're definitely going to want to have some professional liability, because what if you make a mistake and the IRS does an audit of your customer and now they're needing, X thousands of dollars because in fines and penalties because you forgot to add one particular big piece in there. So there's that. Any other questions? Because we're getting ready to move to the last piece, and that's the kind of end by, because it's the law.
I'm not seeing any. Justin, I'll answer that real quick. The presentation, I will share the sheet that Andy's going over. The recording will not be available, but we will send this sheet out. And individual liability, that's a question that got asked here, Andy. So I'm sure you're going to kind of cover that a little bit here.
Individual liability?
Yeah, I don't know.
That kind of goes back more to that executive liability,
Yeah.
Could be general liability, necessary for specific employees in specific industries. Yeah, that could be a number of different things, depending on what kind of business it is and what they're doing. Bonding, surety bonding, we're not really touching on that in this presentation, but bid bonds and completion bonds. Let's see, transportation liability. That exposure could easily be covered under what we're about to talk about, auto liability. Here's the important thing about auto liability. Now, if your business is going to own a vehicle, like a fleet, a small fleet, or your business is actually going to own an auto, whether that's a truck or a car or whatever, they're all considered autos. And they're going to be on the street. You're going to run an errands, parts trucks, or whatever. State law requires that all those vehicles have automobile insurance, okay? Auto insurance. We all have to buy it if we have cars. You have to, because it's the law. And of course, an auto policy is going to have some property coverage if you elect it. It'll help you with the damaged car. And then the liability piece responds if you're at fault or if you're running into other people. Okay, so here's kind of an important thing to know as a small business owner. You might be saying, "Oh, that doesn't pertain to me because I'm not gonna have a vehicle. My business isn't. I'm gonna use my own personal vehicle for the business. All right, I don't have to worry about this. I already have insurance." on my car through State Farm, as our first questioner said. This is all true. Your automobile is already covered. But that auto policy that you have covers you as the individual that owns that. But State Farm will not cover any lawsuit resulting from auto injury, auto liability for your business. So here's why that's important. Okay, so I use my own personal vehicle to drive to the bank and make a deposit, to go to the post office and get mail or buy stamps or go see my customers. I go in my own personal car. I make my own deliveries out of my own car. Well, if you're involved in an at-fault accident, the attorneys are going to be like, okay, what were you doing? Oh, you were on your way to see a customer? Oh, really? Your customer. So that means you have a business. So we're going to sue you, Andy, as an individual, because you were using your own car for Andy Paden sunscreen delivery. We're going to sue that business too. And State Farm is going to say, Andy, I got good news and bad news. The good news is you as an individual are covered. The bad news is your business is not covered by this auto policy that you bought for us personally. So how do we remedy that? So let's go back to the BOP policy and the liability section of that. You will want to add a coverage called hired and non-owned auto liability on that. It's like 120, 150 bucks a year. So it's not that much money, but that coverage will defend your business if a personal automobile is being used in the conducting of that business and something goes bad. This works for your employees, your volunteers, or whatever. I'll say that again. I've got a car, I insure it on a personal automobile liability policy. But if I'm a business owner and I'm using my personal vehicle to run errands and stuff, hired and non-owned automobile liability, HNO, hired and non-owned. So think about it from the business perspective. Andy's sunscreen doesn't own the automobile, Andy's automobile, Andy's automobile. And so the point is that my business is hiring or borrowing the use of my personal vehicle to do business things. And so it seems like overkill, but it's important because State Farm is insuring the personal use of your vehicle. That's what they're here for. We're going to talk a little bit more about that concept when I move to workers' comp, which I'm about to do. But State Farm is not covering the use of that vehicle for your business. You've got to go get that coverage over on your business policy. Maybe this will make more sense when we talk about workers' compensation. If you have go ahead.
Oh, I was going to say, Andy, Sarah, don't worry about the terminology that we use today. The terminology is not important. It's going to your insurance agent and saying, hey, I use my personal vehicle for business. What do I need to add? That's what you need to do. It's not, hey, this is the policy that I need added. Just go in and say, here's what I'm doing. Am I completely covered, or do I need to add something?
The person will ask that question. Hey, are you using your personal vehicle for your business? Well, then we need to add hired and non-owned auto coverage to this. So great point, Ben. Similarly, work comp, the law requires you to have workers' compensation insurance on your employees. But interesting, the law does not require business owners to have workers' compensation insurance on themselves. We recommend that you do so anyway, because a business owner, similar to the car story, might be like, I don't need work comp insurance. I have Blue Cross and Blue Shield health insurance. What do I need work comp for? Well, if you hurt yourself, if you're a plumber and you fall off a ladder or get hurt under a house and you hurt your back, they take you to the emergency room and the first question they ask you is, oh, we're sorry you're hurt. We're going to fix you up. How did you hurt yourself? It's like, well, I'm a plumber and I was underneath this person's house and the floor collapsed and now I'm hurt. Well, your health insurance company, Blue Cross and Blue Shield, is going to go, nope, we're not covering that. That's a work-related injury. That's a work comp claim. And if you don't have workers' compensation insurance on yourself, not only are you going to be responsible for paying for your injuries and the surgeries or the rehab or whatever you have to do, But an interesting part and a compelling reason for business owners to have workers' compensation on themselves, it pays you lost wages. So like during the time you're not able to work and you're healing, the work comp is going to replace some of the earnings that you would have had if you had been able to work at that time. So if you have employees, you got to buy work comp. It's kind of driven by the classification of the employee, what they do. Like an oil field worker is going to be more expensive to insure than somebody that works in the office at a desk in front of a computer. And then it's driven by the annual payroll of that. So that's kind of how the formula works. But even if I'm like a wealthy millionaire business owner and I make $1 million a year, I don't have to pay a work comp premium based upon my income of $1 million a year. They have like charts and graphs and stuff. And so if I'm a business owner, maybe it's $40,000 or $80,000 or so, whatever the number is now, then I would have to pay insurance based upon that rate, not what I actually make. But when it comes to your employers, you pay a rate that's based upon their actual rate and then the job classification. Last two things real fast before we wrap it up and ask for further questions. Sometimes the base limits that are in these policies are not enough. That contract story I told earlier about somebody's going to be like, we want $5 million worth of insurance, general liability insurance. You look at your policy, you're like, I have $1 million worth of insurance. Well, and if you still want to do business with them, you might buy an excess policy or an umbrella policy that increases those limits by like $4 million so that you can have a total of $5 million. So we increase limits. An umbrella sits over many policies. An excess policy sits over the limits of one specific policy. Most business owners are not going to need more than the standard limits to begin with anyway. That's why we're not spending a whole bunch of time on umbrella and access today. Any questions before we wrap it up and I give it back to Ben and Cindy? Okay, as always, it's a pleasure. Again, I'll end as I began. It's an inspiration to be with entrepreneurs who are growing their businesses out of their homes and their garages and out of their bedrooms. It's great. And I really admire what you all are doing. And I would ask you to just keep going no matter what. This can kind of sometimes be scary, but find an attorney, an accountant, an insurance professional in your local town and seek their advice. I'm sure they'll be happy to help you just like I am happy to help you all.
Awesome. Well, I don't see any other questions. Did get the message from Wanda talking about she's been in HR for 10 years and so many people don't know about the workers' comp on the business owner. So she appreciated you presenting that. As you can see, we do have a poll up right now. I'm going to quit sharing this screen right now. And then I'll go back to sharing Andy and I's contact information. That way you can reach out if you have any questions. So we don't, if you don't have an advisor with the Oklahoma SBDC and would like one, please reach out to us. You can reach out to me at that email there or just respond when I send you the sheet, and we will get an advisor sent out to you. So, see, there's a couple. Okay, here's a good one from Jessica. And this is something that does come up often in our chats. I own a hair salon. The women rent suites. Would workers' comp cover them or just myself? Oh, you're muted, Andy.
Yeah, it depends on how you have your contract agreement set up with them, but if they're independent contractors, they kind of need to have work comp on themselves. So if they cut their fingers while my daughter is a hairstylist, and so we have a small work comp policy on her. She has her own liability. It may be beneficial for you to require liability insurance on your booth renters so that it protects your business. If they screw up, you don't want to get sued because of it, or you want their insurance to protect before it comes to you. So waivers are a good way to handle some of those things. But at the end of the day, if you're at fault for something, the courts are going to find usually in favor of the injured, no matter what they signed away. So it's a good risk management tool, but it's not necessarily foolproof.
Fantastic. Well, once again, thank you so much for this presentation. Looking at the poll, a lot of people got some good information out of this. I hope you guys look at our other polls that we have, or our other presentations that we have upcoming. you can get something out of all of them. But I do appreciate Andy's time. He does a great job with this one.
My pleasure.
Here's one. I have a counselor who is switching to life coaching. Is that still professional liability or E&O?
Professional liability and E&O is the same. So I would encourage them to get a counselor's liability policy if they have an exposure there.
Perfect. Ashley, I will be emailing the slides. It'll probably be next week. I apologize. I'm actually home with COVID, so working from my laptop and don't have all of my information to send out. But I will get them out to you next week.
Ben, I believe everyone has I've adjusted the settings, and everyone should be able to unmute.
Okay.
If they need to, if they would like to participate in open mic and ask Andy some questions as well.
Fantastic. And everybody will, Mike, I see your message there. Everybody will be getting the emailed slides. I mean, if you registered, as long as you told us who you are, like there's a person whose name in here, and I'm not calling you out as B. I said earlier in the presentation, if your name is not what you're registered as, please just let me know. That way we can make sure that we have you shown as an attendee. So B, I do have you down. But for anybody else who's not listed as your name, then go ahead and please just send me a message and tell me who you are, and then I will send out that email next week. But feel free to unmute if you have any other questions.
I have a question. This is Sarah. I am kind of fiduciary / manager of my father's upcoming venture, and he can't make up his mind between a mechanic shop and a storage unit facility. Okay, the square footage would be about the same. It depends on the walls in the building. I've been trying to explain to him that he's at added risk with the mechanic shop, because there would be possibly things falling and whatnot, staff and all this other stuff. What kind of differences in policies would that be between a storage unit and a mechanic shop be?
Yeah, great question. And you know, the nature of the business is going to be a major factor in the rating of who drives the property policy, because, you know, there's a greater fire risk inside an auto mechanic shop, etc. But really, the contract will be pretty much the same. It's still going to be a BOP. It's just that, you know, a BOP for a storage facility might be X, and a BOP for a mechanic operation 3X. It's just a different price. But it's still going to cover essentially the same types of things. But every business is different. And obviously, a Main Street dress shop is going to cost less to insure, usually, apples to apples, than a restaurant, because people eat your food and they go away. Maybe they're sick. You know, it's just a greater exposure. You know, small office that does accounting is a different risk profile than, you know, a laboratory. It still could be the same type of contract. It's going to cost a lot more.
Okay. All right. Well, thank you.
You're welcome.
Any other questions? Okay. Well, if there aren't any other questions, once again, thank you for attending this presentation today. Look forward to seeing you on others, and everybody have a
4th of July.
Have a safe and happy 4th of July.
Recording stopped.